Alright, so what's up guys? Understanding equity is one of the very good way to make profits in the financial markets. Trading is not just all about placing trade, closing trades. Okay, it's not all about strategy. This is the risk management side of things and the trade management side of things. So when Plug of Lagos, the winner of the Mercedes-Benz giveaway at Consummate Traders proprietary firm, was asked how he was able to win. He gave us a very good analysis of what he did. He didn't just only buy and sell to make profits. Instead, he started studying other people who were also in the competition.
I saw a guy making crazy profit. I think he was making about 10K, and I had a drawdown down to 9K. On the leaderboard that they posted one time, I was about 20 something. I wanted to give up.
He has known that in order for you to win a competition, you have to understand what other people are doing, and so you can always outsmart them. So he said, when he checked the first person who was leading at the time, which is FX Define, he noticed that his equity was really high and that he doesn't think that he will be able to sustain that equity in a matter of time. So he definitely knows something that other people on the leaderboard knew for him to have won that car. So that's why I want to teach you guys how to understudy equity, pre-margin, and margin, what all these things truly mean, so that you guys can be able to perfect. Let me take you to the trading session, and then I'll show you guys how to work with all of these things. First, I want to explain what all these terminologies are. Equity. Equity is free margin plus margin. Just say free margin, F margin, plus margin. Equity is an amount of money that you currently have in your account. Whenever you close your losses and your profit right now, this amount of money you are worth. That is equity. The amount of money you currently have right now. Once all the trade stops, they say, okay, stop right there where you are. Equity is the amount of money you have. All right. Then free margin. Free margin is an amount of money you have left to place new trades. Free margin. So we have free margin. Margin. I'll just explain all these things and then so you can better put it in your own definition. The best thing is for you to really understand. Free margin is an amount of money that you have left to place new trades. So it's usually margin minus your account balance, current account balance. All right. So and then margin. Margin is an amount of money, is the 1% that you put into transaction. The last video, which I explained leverage and margin is the 1% you bring. Let's say we need $100,000 to be able to carry out a transaction. You need to bring 1%. Why broker brings 99%? 99% that broker bring is what we call leverage. 1% you bring is what we call margin. So I'm sure you understand this concept now. Now let's go on phone, where I brought all these terminologies out. So on my phone right here now, okay, you guys would notice that I have here, we have balance, we have equity, we have margin, we have free margin. All right. So balance is an amount of money you just funded there. It doesn't change until you close your trades or you open a new trade and all of that. Equity is an amount of money. If I close this trade right now, you notice that the current floating loss is $36 minus current balance is going to give you your equity. Your current floating profit plus your balance will also give you equity. So margin is an amount of money. The 1% I put down in placing one standard lot size is $121. Broker brings 99% in this case. So it depends. It's very dependent on the leverage I choose on an account. All right. So free margin is amount of money I have left in the right now to place new trades. Now here's where equity, which is what I'm focusing on in this class, matters. So with equity, I've met several people, even in my training, my mentorship. It will be like they send me the account metrics, so I get to judge the account metrics before I allow them to go live, so that I will be able to better tell them whether they'll be profitable in the long run or not. What makes me to know that is their equity behavior. If I see someone who have a very flash rise in equity and have flash drop too, I know that person will not be able to keep the profit in a long run. All right. So that's how I get to also detect. Now, equity, that's why you see proprietary firm also focuses on do not have more than 6% daily drawdown and do not have more than 12% or 10% in most cases as total drawdown. Why are these things important? Now, if you made a profit of $10,000, I remember a guy, he was so excited, he came to me and said, Jeff, I made $10,000 profit and I'm a newbie on my 50K account. I'm like, congratulations. But first, what's your equity drawdown at some point? When we went to check his equity drawdown at that point, it was first negative $25,000 before he was able to make that $10,000. That's not trading. You lost more than you even made. So that kind of person, you're a struggling trader. So it's not necessary. It's not when you're making profit sometimes that you actually profit. You can have bleed sometimes, but you're not successful. So you really need to understand equity. So you must be able to at least have 2% drawdown on your equity, and then you're able to make 2% or 4%. That's when you're a good trader. So good trader look out for equity. Their drawdown each time, what equity is saying, how best they're able to manage equity before they can say, okay, yes, I'm really crushing it. So in order for you to also know struggling traders, you also know them through equity. Even talking about flipping account is made possible now. I get to add new positions in flipping accounts when I see that my free margin level is equal to my balance. So my free margin must be equal. Now it's currently 9,878. So if I had 3 positions, let's say for example I had 3 positions, sell GPSD 1, 2, 3. All right. So these 3 have to be in profit such that my free margin will rise and be almost equal to my balance before I'll be able to add new position. That case, I'm not trading with my own money again. I'm trading with market money, like my own realized profit. Then my equity would have gone higher than my balance, and then I'm placing trades with the profit that I have not closed yet. You understand? So these are the things that we're trying to put in. Okay, how to start. I'll just be telling you, okay, once you move about so PP in your favor, break even. But this is the mechanism, the actual trade management behind it. All right. So it is really important you understand. I'm sure now you already understand what equity is. Equity is an amount of money that when I ask you to stop trading right now, what you have, or another word is free margin plus margin. And then free margin is an amount of money you have left to place new trades. And then margin is 1% that you bring into any transaction. That's your margin percent. That's your margin. All right. So in subsequent class, I'll be explaining margin level percent. That's another detailed one. So if you want to be a part of my academy, use the link in the description box to be a part of my academy. And trust me, I'm going to be bringing more leads content to this channel. So you must do well to make sure we are expanding this channel. Click the subscribe button and make sure you check around, browse around this channel. There are a lot of other educating content that you might as well see. Please kindly note, if you are still a struggling trader, please do well to make sure you focus on your trade side of your chart. So you notice I've really been dwelling on balance, equity, margin, free margin, because I know that most of you all really need to understand what this part really means. This thing will help you in real estate, will help you in stocks, will help you in cryptocurrency, will also help you in CFDs, will help you in Forex, will help you in every sphere, indices, even in real estate. Yeah, there's also called down payment, equity, amount of money you have in a house, margin, and all of that. So this just helps in all business balance. So don't think it's just only Forex trading or just on charts. So if you're a business guy, you really definitely need to have understanding of what this really means. Trust me, it's not difficult. It's not pure mathematics. It's just being practical, knowing your numbers. Okay, that's what it is. All right, until next time, see you guys in the next one. Make sure you like this video. Please, guys, like it so that this YouTube can recommend this video to other people. All right, bye, guys. See you next one.